Welcome everyone. This is going to be for a student as well as anyone that wants to see how I effectively look at the market from week to week to look for high probability trades. It's going to be a raw video. Don't expect it to be all fancy. It's just going to be factual information that has worked consistently over time, probably over the last 2 years since I started using it. But I've also got records that before I even started doing this that go back about 4 years. Everything works, but it doesn't mean that everything works. But it just means that it will give you a higher chance of having success on the markets week to week. This is the Commodities Future Trading Commission. It's a government website from America. Other people have talked about it before. Some people have said it's a waste of time. I don't think it's a waste of time, but it depends how you read it. I read it in a way that has worked, but it's also open to interpretation. Because if you are going to trade the market, most of it is going to be speculative anyway. And this is just one piece of the puzzle that hopefully helps you to get closer to having success on the markets. So we're at this website. You can see it up here. You can go and bookmark this. I'll add it in the description later. And we're looking for the latest report. According to this, the latest report is September the 2nd, 2025. And if you look at the date, it is now Saturday the 6th of September. The latest report only comes out on the previous Tuesday. Sometimes it's delayed because of public holidays. You might have to wait an extra day or two. But if there's no public holidays in America, you will be looking for Tuesday the 2nd, which is the closest Tuesday to the Saturday, which is the day it released. So the argument is that this is old news. The market's already moved and there's nothing you can do about it. But you'll soon discover that a lot of the stuff on the COT report is from what is called smart money, or I wouldn't say it's always smart money, but money that tends to make money, meaning that like you've got institutional traders that are large enough that they have to report this sort of stuff to the government when they're going long or short on a particular asset. Hedge funds, different types of investment firms, they all have to report to this at a certain level. I'm not sure exactly what the criteria is, but at least we get to look as retail traders or traders that are professional from home that don't work for an institutional company or business. We can still get an insight to what how they're positioning themselves when it comes to making money on the futures market. Okay, so the last one is Tuesday. Generally speaking, the positions haven't really changed that much. I think the last change that I saw was in the cryptocurrency market, probably about as long as a year and a half ago, maybe even longer. And it hasn't changed since. But the way you look at it, it looks like the direction of the crypto market might be moved based on something else. So again, it's not going to give you everything, but it can still help. So yes, the 2nd of September right here. And if you click one of these, you can get specific products. So you see here agricultural, petroleum, natural gas, and so on. I tend to look, I've bookmarked it, but I tend to just look at futures only. You can get futures and options combined. I've never looked at that. Maybe I should later. I'm not an options trader, I'm a futures trader. CFDs to be specific, so it's not direct futures, but through MT5 brokers around the world generally. So I just look at the long format. There is a short format. I've never really looked at that either. I've just stuck to the long format, get as much details just on what the futures market is most likely to do for the week ahead. And if you scroll down a bit more, this one's really important too, the long format. I'm pretty sure this is the same link where you get the S&P 500, NASDAQ, things like this, crypto. It should be in this one. legacy report, so I wouldn't really worry about this so much. I'll just show you the link that I've got that I've been using, but I probably should explore this more in the future. But I'm just going to show you what I've done for the last couple of years. So if you click here, this is the futures with most of the stuff that I trade. It has the Forex, you can see there the Canadian dollar, the Swiss franc, and if you scroll down, it has, yes, the indices and the crypto market, volatility and Forex. There's another one here for metals. These are the links that I use. You can certainly copy them down or look in the description. I'll paste them in there. So this one for that, and then the next one I use is for metals like gold, silver, testing palladium and platinum. This one's for natural gas and oil, and this one's for architecture. Not architecture, pardon. Agriculture, things like corn and sugar, soybeans. I don't trade absolutely everything that's on these, but I do trade things that are on this one, and this one. So if we go back, I'm just going to start with what I do, and this is how I prepare my week of trading. So this is my COT report from the week before. You'll see 31st of the 8th, 6th to the 6th of the 9th. And if you look at the dates here, that was the week that we just finished. So the next one I'm going to create is from the 7th to the 13th. So I'm going to do that now. Make a copy. And again, I can give you a template of this, link in the description after you watch the video. Okay, so now it's made a copy of last week's report. So what we're going to do is we're going to change the date. So the date now needs to be the 7th to the 13th of September. So we can change that now, 7th to the 13th of September. If you're an American, you'll see that my dates are backwards like the British or the Australians. I'm originally from Australia. So yeah, we would say the 7th of September. You can just flip that around if you're from a different country that does it the other way, like the Americans, to the 13th of September. And I can take out this now to copy of. All right, COT report. This is what we're going to use this week for trading. Okay, we can change these dates now. Actually, a better way to do this. Sorry, I'm still getting used to teaching as well as trading. I just highlight everything that's here and I delete it, and then I re-copy and paste it from here, from the original one, and I paste it without, oh, why didn't I pick that up? Let's try that again. And I paste it without original text. I want it to be paste without formatting. Honestly, I should probably change to Excel, but this is what I like to use. If you want to do this in Excel and change it, you can. And then we go back and we change the date again. So that was the old date. We want the new date. So we put that here. Okay. For this week, again, remember, from tomorrow till this time next week, 7th of September to the 13th of September. The date today is the 6th of September 2025, right? And again, this can be in the description later, but then you can come and get all the links to work again, right? So commitment of traders, here's the direct link for the report that I look at. So you have everything here. You can do that. Okay, and then the first section that I look at is cryptocurrencies. It's just the order that I do it. Probably because they move on the weekend. So to be fair, I haven't seen anything too major over the weekend for a while, so it doesn't matter. But let's just go to Bitcoin and I'll show you how this works. We can get rid of this now, we don't need it. We're ready for the new one. We can close that. Now we're just looking at this. You can run Control F and search for Bitcoin. And there's micro. I don't really look at micro. I look at Chicago. Here's the one I look at. Oh wait, it might be back this way. You can scroll down manually. No, it's definitely the other way. Micro Bitcoin, Bitcoin Coinbase. This is where it gets confusing. This is all kind of new. Coinbase derivatives is now here. They update stuff all the time. Oh, that's weird. Bitcoin's always been there. Now it seems to have changed. Maybe I should use the other one. Maybe I'll use micro Bitcoin. They're all here. There's even Solana now. There it is. It's so weird. It's not even in the right place with the other ones. There you go. The one I focus on is Chicago Mercantile Exchange. And basically, if you highlight this, I highlight it from here and I'll show you why. Asset managers, leveraged funds, other reportables, and non-reportable positions. This is what I focus on. And I just want to see how are they positioned. Here's all the long positions. I don't worry about the dealer. I mean, some people might, but it hasn't really bothered me right now. Maybe I should start recording it, but I haven't been surprised on the direction week to week with the way I've done it. So if I've got to change it, I have to change it very cautiously, because if I start changing something, then my accuracy might come down. So we just focus on what I've been doing. Okay, so the longs on the asset manager, they're very long, 8,709 contracts versus only 510 short contracts. Leverage funds, that means they're buying it, if you didn't know what long means. Leverage funds, a little bit less than the asset managed institutional order flow, 2,848,000 long contracts. And they're actually short on the other side of this, 18,170 contracts. Okay, so they're expecting prices to go lower. These are other types of traders, other reportables that are smaller traders. As you can see, 2,631 long contracts. Short contracts, 32,009. So whichever has the largest number is the predominant direction for that group of speculative traders. Doesn't mean they're right, but they are more accurate, obviously, than retail traders. And then other types of traders, non-reportable positions, these guys are more long than they are short. So this group's different to this group. We've kind of got a split here. Asset managers are long, leverage funds are short, other reportables are short, and non-reportable positions are long. So it's kind of split. So it's like, this doesn't really help me because everyone's trading a different direction. And if you've looked at Bitcoin and you've looked at cryptocurrency over the last 6 months to a year, maybe even a little longer, it's still predominantly a bull market. And I think it will. It's just there are nasty corrections along the way. So this helps you to maybe know when a correction's coming in case you might want to short it if you feel it's at a record high, and the short, the downside positions might be so attractive to you that you take a little bit of risk and put a short on, expecting the market to correct. And then once it's over, come back in here, see if anything has changed. And if they're like, okay, they've closed their short positions and now they look like they're adding more long positions, then you should probably buy the market after the correction. This is a great example of speculative trading. It does sound easy, but it's not as easy as in practice, right? But just understand that if they're all split on here, anything can happen. And that's what people are waiting on. So they'll look at charts and other fundamentals to try and figure out, is Bitcoin moving up this week or is it going down? Again, this is only one piece of the puzzle. It's not as easy as that. You have to look at other things. But I will say the best thing that I've seen on this COT report is the long and short positions for gold and silver. And I'll show you that later. Gold and silver has not changed on their long and short position for around the same time as the Bitcoin. And it's just been predominantly an up direction. They're all long and there's very little short positions. And of course the gold market corrects, but as soon as it corrects, more buyers come in and they keep buying the dip. So the gold market and the silver market has been an excellent example of when something does change in this market, it changes really well and will give you a high probability setup. So of course, right now it's all about just buying dips on gold, waiting for corrections and then buying more dips on gold or silver when it forms technically on the chart, because there's a clear, concise direction as to where the market's going. If you compare this to Bitcoin right now, Bitcoin's like roll the dice. Does it go higher or lower? You have to look at other things. We are expecting a correction on Bitcoin. I am expecting it this month, but that doesn't mean that it's going to work. But I'll still put a small short position on, just in case when other fundamentals and the charts look correct to do that. But again, when you see split decisions on this, it does muddy the waters quite a bit, and it makes it more challenging to pick high probability trades. So another speculation would be, well, don't even bother trading Bitcoin right now, because look at all the traders. They're everywhere. Who knows what's going to happen? Even though the charts have shown a bull market for quite some time based on some of this data, you're better off just buying gold and silver, because everyone's long on gold and silver. Just wait for the correct entry point on your time frame, and then the bias should always be to the upside, because that's what it's done. So this does show direction, but you've got to be patient, because I've realized now the changes don't happen that much. You'll see some of these change a little bit, but they won't change that much, and then the next week they change back. So maybe they lost trades the week before. So just because you copy something that's supposed to be an institutional asset manager or a leverage fund, it doesn't mean that it's going to work. If you have been short, I think over last week, I do have a small short position on Ethereum. I think it has moved in the right direction, but that doesn't mean it's going to happen, because the bias could still be to the upside because of the mix. We need to see things like the US dollar start to move higher, and it's been very weak because you're trading Ethereum against the US dollar. And we'd need to see volatility pick up as well. We'd need to see the VIX spike, and that really starts to push down the crypto market as well as the stock market and the futures market, S&P 500 and the NASDAQ. But that hasn't happened yet, but it's due to happen. So I'm anticipating that move, but timing it is a little more difficult. But of course, if you get the signal once you've got all the analytics in the right setup, there's no reason for you not to put on those trades. Just, of course, manage your risk and don't allow yourself to lose too much money, because stop outs are going to happen, but hopefully the stop outs are less than the take profits. So my consistency over the last 4 years is anywhere between, I've seen it as low as 50%, 51%, and still made money. And I've seen it as high as 90%, but the 90% is rare. 60 to 70% on average, which is pretty good, because there's also another statistic saying that most traders around the world, they only get it right 50% of the time, and they still make money based on how they trade. But it's just one example. There's so many different ways to trade this market, and the next trader that listens to me talking about this might not agree with what I'm saying, and then I might not agree with the next guy, and then the next guy I might agree with. So anything could work. It's just how disciplined are you with it, and how consistent are you with it, making sure you're following your trading system as much as possible and not flipping and flopping and changing things too much. If you make a change, it has to be done very carefully. So this has worked, so that's why I'm showing you it. All right, with that said, filling out the chart, asset manager, it's already kind of done because I did it last week. Nothing's changed. So we just say the asset managers are long. And I highlighted in green, right? Leveraged funds, predominantly short. So we put that in there. Other reportables, they are short this week. These guys can go back and forth a bit, the smaller traders. They flip and flop, but right now they're still short. And the last one is long. So basically, how do you interpret this? You say, well, there's no dominant direction, even though the charts are to the upside, because you don't know, even though there's this number here that should be more than the other ones, you don't know how much money is really pushing the short side and how much money is really pushing the long side. We just don't have that kind of privilege. If you did add the Bitcoin dealership to it, which is not something I do, but you can see they're also long too. So if you add that in there, which I don't, that might actually give you a better bias to the upside, because it explains what Bitcoin's been doing. But generally, it hasn't been necessary to get this right. So again, even though this is split, in my opinion, if you follow the charts, you'll see which direction it's going. So in the past, it hasn't changed. So in the past, it's just been bullish, right? Been going up, up, and up, and up. But we are expecting this to change. Will it change on the COT? I don't know if it will actually change on the COT, but a correction can happen without this changing. And if you get the signal to go short, then yeah, sure, take the trade if it's lining up and manage your risk. And then we just click this. That's the chart. If you want to click the chart to have a look at it, we're not going to do that right now. It just shows that you have finished with Bitcoin. Now you can move on to Ethereum and you do the same thing. Let's have a look now. Just give me a minute. Just want to check something. Okay, we're good. Okay, so let's find Ethereum. I think it was back up here. There it is, Chicago Mercantile Exchange. That's micro though. Well, maybe it's the other way. Keep moving it around. I'll go back the other way, where the Bitcoin was. Oh, maybe it's gone. Ether Cash, I think that's the best one. Chicago Mercantile Exchange. Okay, yeah, this is the one. You've got to read it closely. Sometimes it changes. What I've just shown you today, it might be different next time. Okay, again, they're long on asset managers, so we put that in there. They're short on leverage funds. They're all kind of this. They can be different, but if Bitcoin's a certain way, often Ethereum's going to be the same. This next one's actually short too. And the last one's long, so it's kind of the same. Let's check it again. Long, short, short, long. Oh, did I do that wrong? No, I didn't. It's the two in the middle, right? Short, short, long. You do have to make sure you double check these things. Okay, so there you go. Again, so we would just say these are mixed. These are mixed sentiment. That's probably the best way to say it. Mixed sentiment. Half of them are long, half of them are short. And also the COT, I'm not going to track XRP, but you can if you want. It's on there. I'm saving time now. I'm not doing these as much. I just look at Bitcoin and Ethereum. But Dogecoin's even on there now. They come and go too. Sometimes they're on there, sometimes they're not. The next section is Forex, so the Canadian dollar. Let's have a look at that. You're free to do whatever you like. All right, so we look at the institutional. Okay, so they are short. No changes there. Leveraged funds are short too. It's good when the leveraged funds and the asset managers are going the same way. It can help because they're probably the two biggest. Okay, other ones, they're long. And non-portable positions are short too. So the direction of the CAD Canadian dollar is to the downside. That doesn't mean it goes down though. That's just crazy. That's the crazy thing about this. It's likely to go down, but that doesn't mean it goes down. Because if you're a CFD trader, you're trading the Canadian dollar against another pair, like the Japanese yen or something else. And even though you say, look, it's time for the Canadian dollar to drop, that might not be the case, because what are you trading it against? If you click this one, it's just pure futures, where it's just you're trading the Canadian dollar. So the Canadian dollar might be going down on its own futures chart, where it's not traded against anything. You're just trading the Canadian dollar, which actually could be easier than trading the currency pairs, but I haven't had the time to actually trade those. I just like to look at these, compare them to another currency, and then if I see that one's looking a lot weaker to another one that's looking stronger, I like to take the trade on the stronger one against the weaker one. Those are how you find a higher probability setups in the Forex market. Does it guarantee the trade? No, but I do think it gives you a higher chance of success. All right. Okay, next one is the Swiss franc. I may have to stop this video soon, but I will record again soon, and I will continue to show you how to do this, and then you just do it for yourself in your own time. You can ask me questions in the comment section. If you're a paying student or a student that's working close to me, you get direct messaging, but you need to reach out for that. Maybe we can do also Google Meet calls and or Zoom, some sort of online platform, and we can look at taking the next step if you want to get closer to my education. But this part is free right now. Okay, so asset managers are short. Leveraged funds are long, just by a little bit. This is for the Swiss franc. Other reportables are long. And the non-reportables are short. Okay, so it's split, but I do know the Swiss franc from last week was quite weak, and I traded against it using, I think, like the Australian dollar or another pair that was stronger than this one. So that was weaker and the other one was stronger, and it helped to get the direction right before going to market. Okay, that's done. Let's look at maybe one more, and then I'll finish up and I'll edit and throw the next video on so it continues on for you, because I've got to do other stuff. Okay, asset managers are short. Leverage funds, yep, they're long. It does bother me when I don't see changes here, but that's okay. I like to see changes because it means that there's a potential new market cycle. Okay, still short. Oh, missed it. Let's try that again. And the last one, long. Okay, JPY. All right, we'll stop at JPY. I'll be back when I've got more time, and I'll finish this video up for you. Welcome back. It's now time to continue with this COT report. We're looking at the Japanese yen, so just following on after everything that I explained before. Okay, so Japanese yen, the asset managers are more long, so no changes there. Next one, short. No changes there. Next one, long. No changes there. And the last one is also long. So this is something that is concerning because usually all of these are more long when times of volatility are going to spike, but it kind of hasn't happened yet. So that could happen roughly before the end of the month. Doesn't mean it's a guarantee, but a yen spike could come in. Next one is the euro. Now the euro's been quite strong. Let's see if there's any changes there. I'm expecting that to continue. Long. Okay, next one, long. Next one, short. Change from last week. And that one's still long as well. So euro is a good place to park money if you can find the right asset to trade with it, or just trade it directly on the futures market. Okay, Australian dollar is next. Let's look again. Okay, so they're short on this. Short here. Long. And also long here. Okay, so they're kind of mixed here, right? Half of them are short, half of them are long. Okay, New Zealand. There's the New Zealand dollar. Okay, again, asset managers are short. Leverage funds are a little bit long, almost broke even. So there is a change here, but this is not a significant change. They're also long here by a little bit more. It's significant enough because the New Zealand dollar has been moving higher depending on what you're trading it against. But then of course the last ones are short. So again, it comes back to a mixed sentiment when it comes to investor money, or hedge funds and professional traders and how they're trading. Actually, that should be in red because I've put short. Okay. And finally, the dollar. Now, the dollar is further down the bottom from memory. There it is. The dollar's been showing a lot of weakness, but other fundamentals should start to change soon. We just haven't seen it on the COT report yet. Right now, short, still short. Short again. See, this is what you want to see. You want to just see them all generally in one direction. Wow, they're all short. Oh, they've changed, I think. So yeah, dollar's going to get even weaker. Even though other fundamentals are starting to look like there might be a shift, maybe not. These traders don't believe it's getting stronger, so they're still betting against the dollar. Okay, so this is actually quite good to capture, because this is what I was talking about. If these are all still short, then there's a higher probability that the dollar is going to continue getting weaker, and then Usually if the dollar's getting weaker, that means cryptocurrencies should move higher, though it's not guaranteed. Gold and silver should move higher, though it's not guaranteed. Indices and indexes like the S&P 500, the NASDAQ 100, the Dow Jones generally should be moving higher too, because the dollar's going lower. So it means more money would want to buy the stock market because it's more of a risk on play. But that doesn't mean that this can't spike during times of surprise, but it's just less likely to do it now. And I was already thinking this was going to turn around, but maybe it's not going to, because now, for the first time in a while, I think the last time I saw it was in the euro. The euro was, everyone was long, and then the euro exploded upwards depending what you were trading it against. But now that we see the dollar's just one direction, which I haven't seen for a little while, that might show that it's very likely that assets will rise against the dollar now, even more. Okay, let's just move on. Equities now, S&P 500. Let's go back up here. And we'll scroll down to where it is. I just know where they are by memory because I've done this so many times. There's the NASDAQ. So usually the S&P 500 comes up before then. Gone a little too quick. There's the mini. Oh, there it is. S&P 500 Consolidated Chicago Mercantile Exchange. This is the data you want again. Asset manager, leverage funds, other reportables, non-reportables. So, of course, asset managers, this hasn't changed in a long time, are bullish. They want to be buying the S&P 500. They're long. Leverage funds have been short for quite some time. I don't know if these trades are actually open, but if they have been short for as long as this report, they've been losing money. Unless they've structured their way in a hedge fund or something where they're making money somewhere else, and this is just to balance out the portfolio. We don't have that privilege. The next category is long, which hasn't really changed a lot either. Makes more sense to be long on this now if the dollar's going to get even weaker. And then non-reportables are long too. No changes there. And leverage funds could be continuing to lose money on their equities. They've been bearish on equities for a long time. And I think they're also bearish on the crypto, so they could be getting really hurt because crypto market and the equities market has been moving up for quite some time, since March, I think. February, March of this year. Okay, there we go. But again, I don't know if they're actually in these positions. It's just interest. Don't know if they're closing these positions or they're waiting on orders. Who knows what they're doing. But it's just a little bit of an insight to what the professional money is doing. So it should help you. Next one is the Dow Jones. This might be a little bit mixed, but generally speaking, they all kind of follow the same thing, though there's a bit of movement back and forth. Okay, asset managers are long. Leverage funds are still short. Other reportables are short. They seem very small, but you don't know how much money is in that. You don't get to see it. Just doesn't seem like a lot of contracts, 625 contracts. And then the non-reportables are a little more short. So it has moved a bit. So looking a little different to the S&P 500, but that doesn't mean it can't, or a little weaker to the S&P 500. It doesn't mean that it can't go higher, even with that. I've seen it like that and see it still go higher. But you know, there is corrections that may be due soon, so we've got to be careful. This could be a sign of money starting to move to the short side. Let's have a look at the Nasdaq 100. All right, still long, quite long actually, on the asset managers. A little bit short on this side, leveraged funds. Other reportables, pretty long still. And still pretty long on this one too. So generally, it would be wise to buy the dips on this, though corrections can still happen. But even if a correction happened, you should be buying the dip. Generally, this is all the tech sector, tech stocks, Microsoft, Facebook, or Meta, Tesla, and all that. They're all in this one. Some of them are in the S&P 500 and Dow Jones too, but they're more in that. That's the tech sector. I've stopped trading Japan, or I don't have an option to trade Japan the way I want at the moment, so I'm just going to leave this blank, but it's just the same procedure. We'll skip that. This one interests me a lot because it's the VIX, it's the volatility index. So look, the asset managers are hedging here. Even though they want the S&P 500 and the Dow and the Nasdaq 100 to move higher, they also may see the volatility pick up, and if volatility picks up, it'll make the equity markets come down. So if worst case scenario, they'll still be able to cover some losses like a hedge fund. And it's really weird too, because the leveraged funds, they're really short on the VIX, but they're also really short on the equity market. So it could be lose-lose for them, because again, it hasn't changed in months and the market's been moving higher. These ones are short and these ones are a little bit long. So this isn't really what I see. I'd like to see long, 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 long in every class of trader, and then you know that, oh, get ready, the VIX is going to pop. There's going to be probably a very big correction in the market. So that's how you can time corrections. So if you want to get short on that, trade the downside, or just step aside and wait till it's over and then come in and buy back the dip. This can help you to time it a little bit better. But again, you still have to match it up with other fundamentals and then also technicals, what you see on the charts, before you can really enter trades. You can't just put these trades on and expect them to work. There still has to be discipline on how you do it. So again, asset managers are, oh wait, they're short. My mistake. And the leverage funds are short. And we did see volatility move further down last week. They're short too. So you're starting to see that, like, dollar should go lower, volatility should go lower, crypto higher, equities and stocks higher, and potentially also gold and silver. The next one, short. The last one's a little bit long, but only in a tiny position, I would say, compared to the others. So the dominant direction still is lower, but that doesn't mean it can't change next week. That's why you check this every week. Okay, now we're moving on to metals. So we have to change government documents, because the metals aren't on this one. So I'll close that. Here's the link. It'll be in the description later for the metals. just wants to verify me. Okay, so we're looking for gold first. This has palladium and platinum on it. It's just mine's in backwards. Silver comes before gold for some reason. Here's gold, and this one's looks a little different. You look at the managed money, you look at the other reportables and the non-reportables. There's only 3 categories. This is the dealer, and you'll see they're just hedged, right? When they're all long, they're all short, but the market keeps moving higher. So these are the positions that generally tell you the direction the market should continue with corrections along the way without it changing. So technically you still have to make sure your entry and exit points are good. Okay, so again, long for gold on managed money, long again for other reportables, very long too, big difference. This is what gave me hope with what I'm reading in the COT report. And also even on the smaller side, still very much long compared to the short. Now this month is supposed to be volatile for gold. It could be a bit choppy and back and forth, but that's not guaranteed. But again, fundamentals have not changed. So even once that's over, it should continue higher. Even if there's a drop into October, the buyers should come back in and then start to push the market higher. But again, not guaranteed, just high probability. So nothing's changed here, and generally silver follows gold, so we'll check that too. I would love to see this change, but it also proves that it works, because not every asset is as clean as this. You can say gold's not corrupt here. This just tells you everything. They're so bullish on gold. Some traders might argue you should go against this, but in my opinion, not a good idea. If you look at how long this has been this way and you look at the charts, there's no way you would want to short gold. It's just not something you can do. You're better off just going with the dominant direction of the COT. Even if you're like, I want to be the hero and I want to do things my way, I'm sorry, you're not going to beat what's on the COT report if you're reading it correctly. And I'm telling you, this is the cleanest setup, and it's been there. Look, it tells you since the 2004, way back in 2004 last year, this was like this when I really started reading it and paying attention to it. And if you look at a gold chart, you'll just see it just keeps moving higher and higher and higher with corrections along the way. So when you see a dominant direction, now we've just seen the dollar, dominant direction to the downside. This is going to continue the upside, maybe a little bit of a spike in volatility still, but then after the correction, if this hasn't changed, you've got to make sure you're going with the trend. The trend is to the upside. You just have to wait for an ideal entry point. And it doesn't matter if you're a monthly chart trader, a weekly chart trader, a daily chart trader. Swing trading, this is what I like, because it's quite relaxing, and I feel like I can still have a life if I do it that way, right? If I have to keep staring at a chart like a 5-minute chart or an hour chart, even a 4-hour chart, it's more screen time. I don't really want to do that much screen time. I'd rather just put the position on with good risk and let it play out over a couple of days or a week or 2 or a month, sometimes multiple months. I can hold positions 3 months to 6 months, sometimes up to a year. I generally like to sell everything into the Christmas rally, and then I look to reconsider everything after the January, February type holidays. And then I like to look at getting involved again in March. That's usually when everything goes on sale again. So if it matches up, then I can put on these long-term trades and not have to work too hard and get pretty good rewards. So that sounds good to me. So you can do this anyway. You don't have to trade a certain time horizon, but I will say weekly chart to daily chart has given me the best accuracy, but that doesn't mean that you can't do it on smaller time frames. It just depends what kind of trader you want to be. Okay, silver now. Same thing, look, long, long, long. So just highlight these. If you're going to be doing this for the first time, you'll have to type them in. There you go. Gold and silver is still a good bet, one way. Okay, palladium. Palladium, I've been expecting a spike. I've just been testing this on demo. I haven't put real funds on this one. I do trade the other assets I've shown you today on live funds. But this one, it's only been a couple of months since I've added it. So the managed money is actually short, and that hasn't changed. The other reportables are long, no changes. And the non-reportables are long. But I'm not going to look at the chart now, but when I have been looking at the chart, it's still in a correction mode. It hasn't hit the price targets that I would like to go long on this. So I am expecting to go long on this maybe a little later into October. And you can see that I've got this here, not trading needs to be on demo first. You can just get a free account on demo and test it out until you're confident. Next one is platinum. Platinum's a little different. So they're long. Other reportables are long. Now another fundamental I like to follow is actually short at this stage. So it's not lining up 100% though. The COT looks good for a long. I don't think it's moved that much. I have to check. But I'm not checking them now. I'll look at the charts later. Only fundamentals in this video. Copper's another one. I got a really good short on this about a month or so ago. Incredible short, very unexpected, but it lined up, so I took it. But now they're getting quite bullish on the managed money, but there hasn't been much volume. And if you look at other fundamentals, it seems like this will just go into a chopping range for quite a while. So I'm not actually trading this right now, but I still like to look at the COT for changes. Yeah, that's good. Okay, that concludes this one. Now I think we're just moving on to the one that has oil and gas. That one's a little bit different. Here it is. I'll just type it in, nat gas. I think nat gas took off. I'm just demoing this one, but it did take off. I think we're in the money already. There you go, nat gas, New York. Non-commercial, commercial non-reportables. Don't worry about the totals. Non-commercial, they are short, even though the market's rallying, they are short, or it was rallying. Commercials are long, so they're probably making money with this because that's what happened, it moved up. And I think these ones too are making money with it. There's always winners and losers, even in professional money. But the bias is to the upside now. It's supposed to have parabolic moves into the later months of this year, and it should be starting now if it hasn't already. Okay, and the next one is just oil, WTI. We look at WTI financial crude oil. Same thing again. Okay, so they're long. Those are short. And short again. Yeah, we're expecting lower prices on oil at the moment. Should start to fall off a cliff, I think, as the later months come in this year, with a recovery into probably late December into January. So yeah, it's starting to look good for that. I don't think I'm actually in this trade. but might be worth looking at. Next one's corn, still demoing this. So we change out of that. We go to the last one, agriculture. Search for corn. There's quite a lot of these. They all kind of work the same, but I just haven't tried them all yet. It takes up a lot of time to do all of them. So just do a little bit. Okay, manage money is short. Other reportables are long. Non-reportables are short. So we are expecting lower prices. But I think there still has been a spike in prices. So maybe want to sell those rallies. Soybean spiked in prices and now I think it's pulling back and now we're selling the rallies. Should be lower prices into October. Okay, so they're long. Okay, that didn't change even though the price has gone lower. They're long too. Oh, it's changed according to this. And they're short. Maybe it goes a little sideways for a bit, but it should drop this one too, but maybe there's a retracement this week. Cotton I stopped trading because the swap files holding over the weekend as a swing trader were too large with the broker. So I've just got rid of it. Let's have a look at sugar. Spelling that wrong. Okay, sugar is short there, managed. Long on this one. Short on that one. Okay, and that's it. That is my COT report completed. I don't know why I keep saying COT. I think I almost want to say CO2. I don't know why. I got this thing wired wrong in my head. But anyway, thanks for watching. Leave your comments in the comment section. Ask me questions. No doubt you'll have questions. This is just a raw video. I'm not here to show you flashy cards, just show you how I trade the markets week to week, and this is the first part of my fundamental analysis. We'll move on to the next video with another fundamental that can line up quite nicely with this one. And you can trade them indirectly too, meaning that you can just trade off the COT report, or you can just trade off some of the other fundamentals, or you can combine them. That can give you even a higher accuracy. And then the other option too is technical trading. So how do I get into a trade once I see that the COT and my other fundamental is lined up? If I get a green light on COT and the other one, which is seasonality, which will be in the next video, and then I start to see that forming on a daily chart or a weekly chart, ideally, then it's a green light time. You can put the trade on with your risk parameters with a high chance of having the trade work. That will give you a positive net return if you keep following this process week after week, month after month, year after year. Thanks for watching. If you got value out of this video, I would appreciate a like. And if you want to be updated every time I upload a new video, hit subscribe and hit the bell. Thank you so much.